All right. Well, welcome to followmetrades.com, special live trading room for the FOMC meeting announcement here on Wednesday, December 19th, 2018. Glad to have everybody here and looking forward to this session. And I know we've got several guests. I sent out an invitation for people to come join us in this session. We have a regular live trading room Monday through Thursday for an hour each morning, but when there's a special, event like this, we do a special trading room, and I like to invite people to come join us and check it out. So, again, welcome. If you're a guest, make sure you can locate the chat box in the Zoom webinar panel there. There's a box where you can type in comments, and you can see some folks are already typing in greetings. And make sure you can locate that, and notice in that box that there's an address bar, and the default is panelists, so only myself and the other team member, Eva, can see your comments. But if you change that, then you can change it to panelists and all attendees, and you can have a conversation with the other traders in the room, which sometimes is constructive. So I invite you to participate. But for the guests, why don't you type in, make sure you can locate that and make sure you can use it. Type in where you're calling in from. It's always fun to see just geographically where folks are at, what city, what state, or what country. We typically get people calling in from all over the world. We got a little bit of time here. The announcement's not until 11 o'clock Pacific or 2 o'clock Eastern time. Pat from Southern California. It never rains there, right? So the song goes. Thomas, Carson City, Nevada. Victor, Trenton, Illinois. Nice. Warsaw, Poland. Leszek, I hope I said your name right. Wow, you get the distance award so far. Thanks for calling in. Leo, that the abbreviation? Nice. Ibrahim from Kenya. I think you just got the distance award. You just took it away from Leo. Percy from San Diego. Nice. All right, anybody else? I know folks are still logging in. Welcome, thanks for joining our trading room here for the FOMC announcement. We got a little bit of time before the actual announcement comes out. But we'll go ahead and get started. Paul calling from New Jersey. I think we had somebody else from New Jersey as well. I saw a news article that the Holland Tunnel, which runs from New York to New Jersey, the big flap was over where they put the Christmas decorations, and the Christmas tree was over the N, and it should be over the A. I guess they're going to move that. That's definitely a first world problem, isn't it? Anyway, hey, let's go ahead and get this thing started. Just a reminder, I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. So just everything discussed in this room, I'm going to share trades that I like, some trades that I'm in that still may have good entries if you're interested. I'll be analyzing charts, looking for trades, and point out what I like. I'm a trader, but I'm not giving financial advice. I share what I'm doing. Each person needs to make their own decisions about actions they take in the market. So I share what I'm doing. Each person makes their own decision. I'm not giving financial advice. Everything presented is for education and information purposes. Hope that is fair. Hey, Vance calling from Texas. What part of Texas, Vance? My little sister lives in San Antonio, and I'm down there once in a while. I like to go about now and go ride motorcycles. The weather's nice down there. Fort Worth. All right, well, hopefully you got some good weather. It's nice. All right, hey, about me, I know we got several guests in the room, and maybe you got an invitation, but we haven't connected yet. So just a quick, who's Dean? I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been investing for a long time, over 25 years. I started when I worked for Intel Corporation, and they, as part of our compensation, gave us incentive stock options, and they had a stock purchase program, and that went really well. I started there in '93, and right, as the dot-com boom was taking off and Intel stock was taking off, and that thing split and doubled like clockwork every 2 years for a long time. And I started to see the power of, wow, you can make a lot of money in the market if you get it right. And thought I was pretty good at it since we were making a ton of money. Turns out there's more to it than just joining a great company. During this, while I worked at Intel, I got an MBA from the University of Washington. And for many years, I was trained in business school on how to do fundamental analysis. And many years I did that. And it was super frustrating. I got mixed results. I got, did okay on some and not so good on the others. But it was really frustrating because, you do all this work to analyze a company and a stock, and you figure out what it should do based on the fundamentals and all that, and it wouldn't do it. I got so frustrated, I totally gave up on the market in 2007 for a while. I went to the sidelines, went to cash, and I was really lucky because, of course, the market crashed. And I didn't get hurt, so that was good luck. There was no strategy there at all. I couldn't stay away. I was super intrigued by the markets, and I got back in, after the 2009, 2008 crash, and as things were starting to come back, and I got in some really good winning trades. Like I bought Bank of America at like $5 and a few other things like that. But I was totally stressed out, even though they were winning, because I didn't have a strategy. I didn't really know how to manage trades. I got interested in technical trading a little bit after that, 2010. I'd always figure, looking at stock charts, it seems like there's a pattern, right? If you just figure that out, and that's what technical trading is all about. It's all about patterns in price action. I made a lot of mistakes. I for a while, I was like, God, there's just got to be the indicator. If you just buy the right indicator, this will be easy, right? You'll get a green light when you should buy and a red light when you should sell. It's not that easy. And I made a lot of mistakes, but about 2012, I finally settled on the system that I'm using now. And I started getting consistent profits. And the number one thing, people ask me once in a while, what's the most important thing in trading? What was the thing that made you become successful? And it's risk management. There's lots of different trade setups you can use, trade systems you can use, but risk management is the part of any good trading system. So controlling loss. Some trades are going to lose with any trading system, and if you can keep those losers very small and controlled, you got a shot at success. 2015, I launched FollowMeTrades.com. Been doing it ever since then and having a ton of fun. I was just looking at a report today that said, we got the tightest job market since 1969. And, employers are really offering all kinds of incentives and recruiting very heavily, trying to find employees. And it's like, well, I could probably get a good job. I got marketable skills. And then it's like, well, why would I do that? I got the best job in the world, trader, and I get to work with other traders every day. So I'm not tempted at all to go back to working for a company. It was good. I learned a lot. Glad I did it. Glad it's over. And I love what I'm doing now. All right. So that's about me. This is a special trading room. I do this a couple times a year when there's a big FOMC, Federal Open Market Committee announcement. And because it can really move the market and it can change the direction of the market. And so it's an important announcement. And so we want to be here and analyze what happens and watch it real time and see how that would change our trading and whether it presents any opportunities. So here's what we're going to do. I'm going to review my Trade the News setup. All right, I've got a short-term trading setup for when a big news event drops like this. So I'll show you what that trade setup is. We're going to watch the market reaction to the FOMC announcement, which is coming in about 20 minutes. We're going to look for any either intraday or trend-changing trade setups, and if they meet the criteria, we'll go ahead and take a trade. And then we'll discuss trade setups. I primarily trade longer term. I'm not really a day trader. I'm a swing trader. I trade off daily charts, sometimes 60-minute charts. I'm in trades typically a couple weeks to a month is the average. So we'll discuss trade setups on the larger time frames. I'll identify some trades, so you should expect to see some trade setups here. And you'll leave today with some actionable ideas. And stick around till the end. I'd be happy to analyze any charts that you're interested in. I can analyze, futures charts. I can analyze currency pairs. But my what I actually trade in my own account is stocks and options, stocks, ETFs, options. Okay, I don't trade currency pairs. Occasionally we'll trade a currency ETF, but that's my bread and butter is trading stocks and options, and we've done really, really well at it. Okay, so the current market situation, where are we sitting right now? So here's the S&P 500 intraday. Here's a 10-minute chart. So this is an intraday chart. I wouldn't trade 10-minute intraday, but it gives us a good view of what's going on so far today. You know, we've seen, you know, big moves and then big retracements over the last couple of days. Yesterday, you know, kind of a big move up and then a pretty big retracement onto lows for the day. Today we had a pretty strong open, pretty good move up. Dow's up 200 points. The S&P is up 33 points. At the top here, we've had a bit of a pullback. Let's go ahead and look at this on a larger time frame. Let's look at the S&P 500 on a daily chart. And I'll pull that up here. So here's the S&P cash on a daily chart. And you can see since October, it's been going down. No surprise, right? You guys are all traders. You've been following the market. And it's been going down. People, you know, ask, and it's a fair question, what are these indicators that you're looking at here? So I'll walk through the indicators that I'm using. You can see these triangles. They're called pyramids. They're called pyramid trading points. And you can see we got some big red ones on the S&P 500 going down. So these indicate bearish entry points at the pointy end of this, the apex. When some other conditions are met, they indicate that that's a good point to go short. And you can see, boy, the first one that showed up here, that was a pretty good point to go short. And then the base of that, the flat area, would be where you would put your stop, your exit point. This shaded area here is the Ichimoku cloud. I use a very simple version of that. I've got a couple moving averages. I got the 200-day moving average is this heavy white line, and then this lighter line is the 50-day moving average. You can see on the S&P 500, we had this death cross, that's what it's called, where the 50 crosses over the 200, and that happened last week. And I've got a momentum indicator on the bottom here. This is called, it's a price oscillator. It helps you interpret price momentum, kind of smooths it out from price action. It's called the optimum wave locator. And this one and the pyramids are from traderscoach.com. Good friends of mine, another company, Bennett McDowell. Probably a lot of you know who Bennett McDowell is. You've heard him speak before. Good folks. So those are the indicators. So the S&P 500, you know, if we look at this on a weekly chart, if we just step back and take a big picture look at this, right? We've been in, you know, 8 or 9 year bull market. No surprise there. This is a bigger and more important pullback than we've seen even in some of the earlier pullbacks, like in 2016. This looks like it has the potential to be the pullback, the correction that everybody's been worried about. And, you know, it depends on your perspective on the markets. I'm not worried about it because we can profit dramatically from a market going down. If this is it, and then there's pretty good evidence, you know, using Dow theory, we've got a low, lower high, new low. We've broken the Ichimoku cloud. We got negative momentum. You know, on the lower time frame, we had a death cross. So if this really is the correction, then the target zone for this is a Fibonacci retracement area of 38.2 to 61.8. It's these blue lines down to about 2139 all the way down to 1653 would be the target zone for a retracement on the S&P 500. And so far, it's looking like there's a fair chance that could happen. So here we are on a daily chart. Again, pretty good correction. For a few weeks, we were in a channel. I had it marked with a line here on the top, here on the bottom, and we just broke out of it earlier this week. We got a close below the channel, and then last couple of days, we've had price down below it. Today, it's up just a little bit, but I'm not convinced. I think we got more to go down. So that's the overall look at the market. Now, what's the expectation for the FOMC? You know, right now they've announced already that they plan to increase interest rates by a quarter point in December at this meeting. So that's the expectation, is that they do that. And that won't be a surprise if they announce that. The big question is, What are they going to do next? Are they going to, looking out in the future, are they planning, this is actually the ninth rate increase, I believe, since the end of QE, the big stimulus, quantitative easing, right? The ninth interest rate increase. So is that train going to keep going? Are they going to keep raising interest rates gradually, or are they going to back off? If you're following the news, the administration is frustrated. They think interest rates are high enough. They don't even want this increase, let alone anymore. So, it's kind of an interesting dynamic for the Fed. The Fed chief, of course, is under fire by the administration. President's not happy with Jeremy Powell. Too bad, he's appointed, and that's that. So will he bow to political pressure? Will the Fed Open Market Committee? Do they believe that their primary mandate? They have two goals, two mandates: to control inflation and full employment. Those are the two needles that they're responsible for moving. So clearly, we're at full employment, right? The best employment numbers in decades. And interest rates or inflation really isn't a threat at this point, but of course, it's like turning an aircraft carrier. They got to be out in front of that. So is there a threat or a risk of inflation that they need to be out in front of and try to control through interest rate increases? I don't pretend to know the answer. And I'm a technical trader. I don't, in terms of trading, I care, as a member of the society here, what interest rates are and all that. But as a technical trader, I don't care if they raise them, and I don't care what the market does. I'm going to trade based on the realities of it, right? I don't have an expectation of what should happen. I trade based on what is happening, the realities of price action. So we'll see. We'll just see. But it's fun to think about it. So what do you guys think? Type into the chat box there. Do you think the Fed is going to have more interest rates announced beyond December? Just type in a yes or whatever response in the chat box there. More rates, no more rates. What do you think? At least one, unchanged, yes, on hold, one, more, no more, unsure. Carrie, it's okay to be unsure. Lolita says no more. I think that's the Victor says they're going to wait. Jerry says no. I think that's the overall consensus when you read the financial press anyway. Leo says a quarter point today, and that's been announced. That's the expectation. So probably if they do say more interest rate increases, that's going to be a surprise, and it may cause the market to react. Of course, on the flip side of that, right, you just little game theory, game it out a little bit. If they say no more interest rate increases are going to hold, then people started trying to read the tea leaves and go, oh, they think they're worried about the economy, right? They're worried that the growth is slowing and all that kind of stuff, and that could cause a reaction. So again, you can get dizzy trying to see how all the pieces work and guess what they're going to do and how the market reacts. Best just to let it happen and then trade accordingly to the reality of price action and what's going on in the market. Tony says raising a raise would be a bad way to end the year. Yeah, it could be. Could be. All right, so we got about 10 minutes until the news comes out. And so let's see what, probably nothing going on the S&P 500 right now. Everything's kind of on hold. We're just in a bit of a channel right now. You can see between here and here, the whole market, all eyes are on the Fed. So we're just moving in this channel right here until the announcement comes out. Diane says, if they raise the rates too much, capital is going to flow out of the EU into the USA. Could be. Yeah, the Dow is up right at this moment, 266. The S&P is up 36. Gunter says it depends on how much they hate Trump. Yeah, I don't know. I think the Fed folks, for the most part, are pretty objective. I'm sure they all have their opinions, like we all do, but hopefully, presumably, they would be doing what they think is best for the economy, for the country, regardless of that. And we certainly, in this trading room, we observe how politics affect the market, but we refrain from political commentary. There's plenty of other places it's just divisive. So obviously, policy has an impact on the markets and on how we're trading, but we observe the reactions of the market, but this isn't really the forum for political commentary. Plenty of other channels for that. Carrie asked, but how about Christmas coming, less trading? Over major holidays like Christmas, they're typically, a lot of the institutional participants are on vacation, and so volume does come out. That can be a factor. That's a reality. The markets can get a little choppy. There's this phenomena that people talk about, the Santa Claus rally at the end of December. There's, the market goes up. That's, I don't trade based on that. That's not a statistically proven strong enough phenomenon to trade on. So I just trade each year according to the current realities. And, again, I've learned, for a long time, I was a fundamental trader trying to make all the different moving parts and wheels make sense. And what I found was I was actually more successful when I just stand back and study price action. There's a story being told, and what is happening on a chart, to a degree, can predict with a reasonable edge and certainty what's going to happen next. So that's where I stay focused. Cappy says they may drop interest rates today. Okay. We will see. Helmut says, where am I positioned right now? I take a pretty balanced approach. So right now, here's the open trades I've got. And these are trades that I'm taking in my own account that I've published to my Stock Pick subscribers. So we are primarily short at the moment. We've got 5 trades that are short, and 4 of those are in nice profit. One of them, AMC, is hovering pretty close to break even. So I'm primarily short, and short in some really nice trades. And I've got 2 trades long. I'm long on a gold stock, which is in stunning profit. We took that about 2 weeks ago, and it's in 18% profit. I'm long this individual stock. We just closed a couple today that were long. But RNG, I'm long. This is a pretty nice bullish pattern here. Okay. A couple of our short positions. We're short QEP, which is an energy company. This has been a phenomenal trade. I'll blow it up so you can kind of see. And here's the pattern. I use a very simple version of Elliott Wave in my trading. And here's what we saw. Big, huge, impulsive move down, really starting through 17, correction up, and then clear evidence of the next impulsive move down beginning. And so we caught that. We saw evidence of that beginning back here, and we took a short at $8.40, and it is down here at $6.42. And we had a target on that trade at 710. It's blown through that target, and a bigger target, and that was really set at a prior low. The full Elliott Wave 5 prediction is down below $6, and looks like it's going to make it. So that's a great trade. We've been in that since the 29th of November, and we're at 24% profit on the shares. Ibrahim says, it's getting late in Kenya. I bet it is. The news is coming out in 5 minutes. So 5 minutes, we'll have that. I've got a nice long trade going on here on Anglo Gold. We took Anglo Gold long at 10.50, and we're sitting up here at 12.38. So that was a nice move. We're getting ready to close that trade. We're sitting in 18% profit on that one. Pretty good. Yeah. These other short trades doing pretty well. Again, 4 out of 5 are in profit. This is the current P&L column here. This is the dollars. This is the percent. Oh, I was going to show my setup. I almost forgot. So here's what we're looking for. If a short. So when the news comes out, there's typically an initial move, big initial move. And then after the initial move, if we get a Fibonacci retracement of 38.2 to 61.8, and then evidence of the initial direction taken off, this is where we would enter low, lower high, new low. We would try and catch this follow through move. So if there's a big initial move and then a correction, we try and catch the follow through. Here's what it looks like long, a big initial move on news, a retracement, catch that follow through going up. That is the setup we're looking for after the news drops. And so we'll be watching the S&P and gold primarily. S&P 500 and gold are the ones that I'm interested in that are going to react to the FOMC announcement. So I've got the S&P 500 here on the right. The top panel is a 10-minute chart. The bottom is a 5-tick range chart. And then gold here is in the middle. Gold's been on a nice tear recently. It's very bullish. Longer term charts, the daily chart. So I'm looking for whatever it is, Helmut. If the initial move is down, I'm going to look for a retracement and then a follow through. And if the initial move is up, I'll look for a retracement and follow through. Either way. All right. So we got about 4 minutes. And Eva, you're online. All right. You're ready?
I'm ready.
All right. Welcome, everybody. This is Eva. Eva's part of the team.
Hello.
She helps me out in the trading room. So did you find the source for the FOMC announcement? So we can...
I just turned on a TV channel. What did you think was a better place?
There's several sources. Forex Factory, Econoday, a couple other places have feeds real time when the information comes out.
Okay, let me look up Forex Factory.
Let me. I'll chat you over a link.
Yes.
I'll copy it to everybody. This Forex Factory is a pretty nice free news site. Mike, is that a symbol you're interested in? KBEVF? Is that what you're typing? We're going to wait for the announcement, and then we'll take a look at any symbols folks are interested in afterwards.
So one thing for our trading group I found really interesting was the SPY is moving right in their forecasted range. It goes to the top of their forecasted range and it comes down.
And by their range, you mean vantage point, not everybody knows about.
Yes, that's what it's a artificial intelligence software package we use to help confirm trade setups.
Just one of the limits of the artificial intelligence software is if there's new information, if the Fed does something unexpected and there's a dramatic reaction, you know, the AI software doesn't know about that new information, the new price action. So sometimes it can, and they tell you that, you know, hey, if there's a big news event, right, the results aren't going to be valid.
Yeah, so prior to the announcement, everything was moving as expected.
Right.
So we're still moments away. So.
And Lolita says Live Squawk is a good source. Yeah, we'll give that a shot. Check it out. And so the S&P just shot up and it is 2 o'clock sharp on the East Coast.
And someone knows something we don't know.
And now it's shot down. Now it's just, I think it's just people are trying to get positions ahead of the drop.
I don't see anything yet. Okay, here we go. It just says it's imminent. So just in, Fed hikes rate signals just 2 more hikes in 2019. That came over my phone.
Oh, interesting. And the market did not like that.
Is it heading down? Oh, yeah. I just put a chart up. That is.
Interesting that gold's going down as well at the moment.
That is strange.
So 1/4 point now and 2 more in 19 is what they said?
Yes, that's what came over my phone with Yahoo Finance. Let's see if I can get any more detail.
You know, Yahoo Finance is really good. It's surprising the quality of the information they have. They're losing money. Was it AT&T or Verizon that bought them? I forgot. One of the big phone companies bought them, and they don't know what to do with it, and they're losing money.
I'm not sure which one. However, I was in a short position, so I was getting nervous. So I'm feeling a little better at the moment for now. We'll see if it reverses.
So interesting that gold's getting kind of pounded. The Dow just dropped 100 points after the release, more than 100. I'm really watching the S&P. The S&P is it's 500 stocks versus 30. I think it's a better indicator. It's funny, the news talks more about the Dow. I think the S&P is more important. Much more accurate view of the total market. But the S&P is, wow, it's getting hammered.
So it's still for the day up 100, the Dow.
Yes.
So it's kind of mixed news because if they're going to continue to possibly raise, it means the economy isn't slowing.
That's right.
So it's kind of, maybe you'll fall somewhere in between.
If we look at this on a range chart, it went too fast. There's going to be too much here. Let's look at it on like a 1-minute chart. So this is the pattern I'm looking for, a dramatic move. Obviously, this move was dramatic. If there's then a retracement up and then a continuation, that continuation is the move. Trying to catch this initial move, that's gambling. That's just gambling, right? And it's not, you don't have an edge in that. But if you get a retracement up and then a follow through, the follow through is going to be bigger most of the time. So we'll watch that. In fact, let's drop it to a 30-second. Be easier to see.
Oh, you could do it at 30 seconds? Wow.
Just for each price bar. That way you got more price bars being generated. Taking a minute to load the data. There we go. So we're obviously had this big dramatic drop, and what we would like for the trade setup that I like for a news event is just watching for a retracement up into a 38.2 to 61.8 Fibonacci level, and then a continuation. It'll take a little bit to play out and see if it gets there. Let's see how my short trades are doing.
So here's what they're saying about that the Fed is expecting to hit the neutral rate at the end of 2019. So
The
we're gonna,
neutral rate. Okay.
and the neutral rate they consider is 2.8%.
I know the Fed, back when they was near zero, they were worried because then if they need stimulus, right? If your gas pedal's already on the floor and you need to pass somebody, you got nothing left.
Look at it climb right back up.
Isn't that remarkable?
Mm-hmm.
Daryl's asking, do I set stops within TradeStation? If I'm going to be away for a considerable amount of time, I set stops on my trades. But for the most part, I set alerts. So if at all my exit points, whether you believe in having stops on trades, some people, believe that the market makers are gremlins who are out gleefully taking out people's stops. I don't necessarily buy into that. But some people are worried about having actual stop orders in place. They don't like it. Regardless of how you think about that, it's critical on every trade, I think, I've learned the hard way, to have a predetermined exit point. And so on every single one of my trades, you'll look, if I just pull up a chart, there's a red line drawn on the chart. This is a short trade. So if it goes up to this level, 1545 on this trade, I am out of the trade. I use alerts. So if the alert goes off, I go execute the trade. But whether you have just an alert or a stop, an actual physical live order in place, your choice. But having a predetermined exit point that you will actually get out of the trade at is critical. And then I think there's a science to that exit level. I don't believe in arbitrary. Well, if I'm down $500 or if I'm down 5%, I think that's arbitrary. I think stop should be set according to price action, and then the position sized based on the distance between your stop and the entry. It's a whole nother discussion. Daryl says, how logical would it have been to buy ATM put and call for the event? I think you're talking really about a caller strategy. That can work. You got to get a really big move to make a caller pay, where you're basically, you don't know which way it's going to go. You just expect it to have a big move one way or the other. If the move is narrow, you lose money. If you get a huge move, then one side, you're taking a position on both sides, and you got to have a big move to make that thing pay. Helmut, the pyramid here, this yellow pyramid is what's called a potential. When it's yellow, it's potential bearish pyramid. So if price were to go below the bottom of this, it would trigger and be red, and that would be a bearish pyramid entry point. If price goes above the top of it, it's going to disappear. It's going to be invalidated. I'm actually hoping we get this retracement all the way up into this Fibonacci zone or close to it, and then a reversal. That would be an ideal trade setup. Right now, it's price doesn't always fit into the box that we've drawn. But if it does what I just described, big move, retracement into a Fibonacci zone, follow through, that's a highly probable event. It's a predictable. Then what's going to happen next is fairly predictable. So we'll wait and see. And it just turned red. You see when price went right below the tip there. Was that enough of a retracement? It was awfully close now that I look at it. It got very close to the 38.2 level. And is this the follow through now? I like it when it gets in there and there's no ambiguity about it. I like that better. Gunter says Russell's heading down the most. Yeah, the Russell futures are down 0.15%. Actually, the S&P 500 is down 0.1. They're about equal. They're bobbling around a little bit. The Dow is back and forth between red and green, right around break even. And the S&P found a little support. It's like a drama. It's like a story being told, huh? Big fight between the bulls and the bears. So here's this existing trade. So I said you'd walk away with some trade ideas, some actionable trade ideas. So here's idea number one. This is the trade that I'm in that I've published to my subscribers. This is AMC short. And what we're doing is, this is really that same pattern that I'm talking about, just over a longer time period. Big impulsive move down, correction up into a Fibonacci zone. Clear evidence the next move is starting down, low, lower, high, low, lower, high. Below all moving averages, negative momentum. It's all good. I've got a target on AMC of 957. The current stop is 1545. And that looks like a good entry still right now. Look at this nice low, lower high, went up under the 200, reversed nicely. It's heading back down. This pyramid's about to get confirmed. So that is a nice entry, and I'll type it in for you. So AMC, short, stop, which is the critical value, is 1545. Target is 957. There you go. If you're looking for a trade idea. I'm a trader, not a financial advisor. I'm not giving financial advice. If you take the trade, it's your decision. I like it. I've got my money in it. Al says, would it make sense to scale in, to add to the position? That's an interesting discussion. Bring that up in the, we're going to let the market settle, Al, before we make that move, but bring that up in the trading room again tomorrow. And we might just be, that might be a clever move, is to take a scale in on AMC. Add to our position. So S&P is heading down. We're going to get this second pyramid. That could really be a go. Yep, there we go. It's confirmed. Let's take a look at the S&P on the, let's look at the SPY. That's what I would actually trade with. I don't trade, live futures. I trade stocks and ETFs. SPY is an awesome ETF to trade. So it broke this channel. Is there a case for shorting the SPY? If you do, it's a long-term play. Right? It's interesting. I think you said, Eva, it's within the predicted boundaries, right? For
Yes.
For Vantage.
Yes, it is.
You could actually use the Vantage triple cross as a stop. That has worked pretty well.
It's heading to the low range, but it still has been trading right within it all day, except for those few minutes right before the announcement where it popped up.
My problem with the SPY is let me see if I can work out a target if there's like a wave 5 move here. I like to have targets in my trading. Yeah, that one's tough. It's already in the target zone, the wave 5 target zone. So, could it continue down? Absolutely, it could continue down. But for the moment, this current sequence of an impulsive move, a correction, a continuation, it's already between these two green lines. So I'm not going to trade the SPY. And there's plenty of other trades out there. And speaking of that, we had a handful of candidates this morning. Let's see, now that we're past the announcement. Right, and we got a nice follow through. So we did have a retracement here. It was a shallow retracement. Didn't hit the Fibonacci zone, but we got a nice series of lows, lower highs, lows, lower highs, lows. I think we got a move going on here. The market's clearly heading down. So let's bring up a couple of trade ideas we had this morning in the trading room, and I think they are going to be cleared for takeoff. And CME was one of them. And CME, shockingly, is up. So I think we're going to hold on that one. It's up 2%. Maybe now
is that a daily chart you're looking at?
Yeah. It's up 2%.
Is it possible to see if it dropped a little bit from its high, or can you tell on that?
Well, it's below today's high. You can just look at the price bar and see the wick
Okay.
up there. Um, yeah. Now that could just be a better entry. We do have a nice bearish pattern here. So it could just be. I'm going to wait for it to reverse down. We might take that one tomorrow. We'll see how it plays out. XLV, which is the healthcare and healthcare insurer ETF. This looks good. And it's not down too much, but it's got a nice bearish pattern.
So everything in the market just has gone negative. Even the Dow Jones, it's only down 18 cents, but everything went red from its gains of today.
I'm looking at the targets here on XLV. I think we're okay on this. So I'm looking at the distance between, I would have my stop at the top of this pyramid, my entries right here at current price. My target would be at this prior low in the Fibonacci retracement zone. And I want to make sure that this distance is bigger than this distance, and it's at least 1.2, and it is. I can see that by my eye there. So XLV looks like it's going to be a decent trade. And the other one we were interested in was
Sony, wasn't it?
Express Scripts.
Oh, okay.
That one's up as well. Again, that could just be a better. So we'll look at that tomorrow. CME and Express Scripts. Surprisingly, with the index getting hammered, gold is too, which normally they move opposite. But who cares about normal, right? S&P's pulling up now just a little bit. Interesting. Maybe this is going to be the retracement. Virginia says the VIX is not impressed. VIX is tricky to chart to trade. It can be good, but you gotta be careful. You gotta be really tuned into it. Now this might be the big retracement here. You see the S&P is creeping up toward this zone. Maybe it just took a little longer.
See what it does when it gets to the cloud.
Yep. And if it reverses in the Fibonacci zone in the cloud, that's going to be a really good thing.
So is that the setup you're looking for, or is there still just not enough profit?
No, that would actually be good. If it goes up into the cloud, into that Fibonacci retracement zone, and then reverses and heads down, that could be a good setup.
So I just saw another highlight go by. The Fed's still expecting low unemployment rate of 3.5%. And then it's supposed to inch up after 2019. That's what the Fed interprets it.
Interesting.
So I'm watching on the 5-minute SPY, and it hit the cloud and reversed. Oh, same on yours.
Yep. I tell my 20-year-old, I go, this is a way better video game than Call of Duty or anything like that, man. He hasn't bought into that idea just yet.
I was just thinking my 14-year-old wouldn't believe that either. The Fed also sees inflation inching down this year and next. Isn't that one of the reasons to raise the rate? Because of inflation fears, but they see it going down, so they're still raising it? Does it make sense?
No, they're trying to keep it from going up, rising out of control. They want inflation at about 2%. That's the target. And so if it starts, it can go exponential like it did in the 70s, right? If you don't get out in front of it. And raising interest rates can slow inflation because inflation comes from an overheated economy, and when you raise rates, raise the cost of borrowing money, it's harder to expand, blah, blah, blah.
Yes. So I'll know for our next announcement that my phone is the fastest source of the information.
What was your source?
It was Yahoo Finance. Just I had an alert come on my phone.
Yeah. I got several news sources on my phone, and when you sign up, Wall Street Journal, a variety of them. When you sign up, whether you asked for it or not, you get alerts pushed. Right? The phone makes weird noises.
Well, today I didn't mind.
Yeah.
Someday.
And to go figure out how to turn that off is like 8 layers deep in the menu. So this is interesting watching this the pattern forming here on the S&P 500. We had this big dramatic move down. We had this move up. We got a little pullback here. So is this? I can guarantee you 100% it's going to go up from here or down from here. But the pattern that it ultimately forms is going to have more meaning than a tongue-in-cheek comment like that. So if it's a high, higher, low, new high up into the retracement zone, that actually would be great. And then a reversal, that would be a very orderly thing. And I would actually trade that. Here it goes. So for people tuned in, this is either super interesting and exciting, or it's like watching paint dry. I'm riveted. So we did get a high. You see this pyramid confirmed, so it did go high, higher, low, new high. This is the retracement. If we get a reversal anywhere from here with a low, lower, high, new low, I'm going to take a trade on the SPY. Because the follow through can be bigger than the initial move. And so now we got to remeasure. And now, when we measure the whole move in this thing, it actually went up and touched this retracement. So if this is it, and it's going to reverse from here, the target for the follow through is going to be down in here. We got to see if it ends or if it's going to go a little higher first.
So where do you want it to go? Above the pyramid?
At this point, it could go above the pyramid. That'd be fine. What I want now is a clear sign of a reversal pretty soon, heading down, and that will signal our entry. It's going to take time to play out.
It just popped over the pyramid, didn't it?
So now it's up in the retracement zone between these blue lines. So it has met the rules, rule 1, rule 2. Now we just need rule 3, which is a low, lower, high, new low, signaling a continuation of the original trend, and that would give us So if I do trade it, it's going to be with the SPY. And let's get, I'll trade it with an option. You know, I publish information so people can trade it with a, you know, just with the shares directly or with contracts. Contracts have a bunch of advantages. So I'm going to, while we're waiting, see what SPY contract I would like. I think it's going to be a fairly short-term trade, so I would probably trade it with the February monthly. I want a little bit of room in case it keeps running. I want to be able to stay with it. Obviously, it would be a put contract. I trade in the money. Want a pretty decent delta at least in the 60s, ideally into the 70s. Start paying for those. Look at the open interest. It's just stunning on the SPY. I love trading SPY. It's so deep and wide. Daryl says my blue retracement lines are barely visible. Well, I don't want them to dominate the screen. It's here and here. It's a retracement line. So we are solidly in that retracement that I was looking for. Here's the impulsive move. Here's the correction. Now I just need evidence that that original trend is going to be continued. I need a low, lower high, new low. Oops.
I think we just got a newer high instead of a newer low.
As long as it, and as long, it can retrace a long ways, as long as it stays below the 76.4, life is good. What I want to do is draw this for you, and I'm trying to get my pen, and come on. I'll get it and then get my chart back for you. Okay, here's my pen. At some point in here, and this is all good, right? Here's the retracement zone. It's between these two blue lines, so we're squarely in it. And as long as at some point in this zone, you know, it can go up a little bit more. And then I want to see price do this. Low, lower high, new low. When I see that, when that new low is made, it's got to be, you know, a real move. This is a real move, right? This is a high, higher low, new high. These are all low, lower high, low, lower high. Those are all real. If we get this reversal, low, lower high, new low, then we got a target zone down here. And then I would be interested in a trade. So we're just waiting.
We got a couple of red candles. Maybe it's starting.
Virginia says, it's exciting. Yes, it is. a true trading geek, a fellow traveler here. What I'll do, I gave you one trade that I think was great. AMC, let me give you one more. EPC, we took this one a couple days ago. This is another trade. You still got room to get into this one. Not for much longer. So EPC is a nice short. The target's down here at 34.20. You still got a good reward to risk ratio, but not much. So EPC is another short. There you go. That's another potential trade. It's a nice one. Same pattern as the other one. So while we're waiting for the pattern to flesh out here on, here we go. We got a
Yeah,
low.
it's
We
getting
got a
there.
low. But now we need, you don't just take the first move. You look for You look for proof because it could be just this, right? It could be a lower high, lower high, new high. You want a low,
Well,
lower
there it
high,
goes.
new low.
Let's see if it makes a lower high.
And sometimes you can wait and wait, and then it doesn't happen, right? Welcome to trading.
Patience. Oh, it's popping up a little too high. Oh, it's about to pop out of the cloud.
Yep.
That didn't happen.
Okay, so while we're waiting for that, I see people are typing in a few symbols they'd like me to look at. Let's do that.
I'll keep an eye on the chart so you can check symbols.
Okay. So looks like Adam wanted to look at GTG. I think that's what you're saying. Nope. Maybe that was an abbreviation or something. Andres was interested in BABA. BABA's getting hammered here. I wouldn't short it. You've got this prior low right here. The wave count isn't really clear. It did look long, and then it totally fell apart. So I don't like a trade on BABA right now. It's not what I'm looking for. Daryl had a couple. HMC. Daryl, you've been connecting with me since the Traders Coach days, right? You've been here from day one, if I remember. So you got a potential move off the bottom. It reversed before this prior low. You got a high, higher low. If you get a new high on HMC, which is Honda Motor, here, if you put in a high here, you could have the beginning of a retracement. Now you are under the cloud, you're under the 50, you're under the 200, you got negative L, so that would be very aggressive. A more conservative approach to this would be to let it break above at least the cloud up here, and then be looking at it. I would not short it against this floor down here. But if you're looking for a long, maybe up in here would be good. And then INCY. INCY, is completely deteriorated now. Now it's in this channel, and so it's a good one to keep an eye on. I would watch. Here's the current upper boundary. Of course, here's the lower boundary. I would discount that wick. I would look for a break, and you're going to break the channel right as you break the 200-day moving average. So an entry up here at a break at about 70.20 or something, that would be good. You could have a good trade if it breaks. If it continues in that channel, I wouldn't touch it. Would not touch it. And I mentioned that in our trading room, we were watching CME. And that one looked like a short. It was up today. It's still up 3%. So if it reverses and takes that out and puts in a new low the next couple of days, tomorrow or beyond, we'll be interested in the trade there. XLV. There's a potential trade now. It's got a okay reward to risk, not super. We'll think about that. And then Express Scripts. And Kerry says Powell is commenting on Bloomberg. Uh-oh. Got a Fed head on the mic. Express Scripts is looking like it's a potential short. We want to see it get back down below this low. We'll probably, if it does, it gets down below this pyramid, we're going to take that thing for sure.
So it might be close to getting there.
Well, now we got a low, right? Our high is right in this. So it took a little time to play out, but we got this nice retracement. It's perfect.
But
We
every
got a
time,
low. Looking for that lower high.
just last candle now.
If it stays below here and then reverses, come on.
I feel like I'm watching Pong from way back in the 70s.
Yeah, it's kind of like that.
There are a lot of, a third pyramid just appeared on my screen. Oh, so I think what's going on, Powell's saying policy decisions not on a preset course and could change. So 2 additional rate hikes are not guaranteed.
Yeah. Mike, it wasn't that I didn't like it. We were just busy with something else. Let me take a look now. KBEVF. Don't like it. And the reason I don't like it is it's low volume. It's only 100,000 shares. You can see back here it was just fly specs. And it's an over-the-counter stock. So, and it's a penny stock. I don't do it. I don't do penny stocks. So now that I've looked at it, I don't like it. Sorry. Let's see your other symbol here. WNDW. It's over the counter, low volume. At least it's not a penny stock. Over the counter, you want to be a little careful. You can be okay, but so it does have a nice retracement. It had this massive move down. And so this would be a corrective move that you would be trying to trade to the upside, right? You could look how it hit the 200 and absolutely stalled. So it came up to the 200 and died. If it can get above this last high and the 200, you may have a long into this zone between $5 and $7 if you like trading over the counter.
Dean, a bearish pyramid. It's a minor pyramid just developed.
Okay, so we got it. We got the low, right into the retracement zone, low, lower, high, new low. That's a go on the SPY. So let's go. This is exciting. So this is going to be a short-term trade. Let me get rid of this other stuff here. But it's pretty nice, and you can see on this 10-minute chart that reversal happened right at the 200 period moving average. Let me clean some of this off. Blow it up. Let's see what our target is. All right, let me go to a 5-minute. A few more price bars. John, yeah, we got stopped out of Facebook earlier today. That's why we use stops. Not every trade wins. We take a controlled loss. So the target here on the SPY on the 5-minute chart, and this could carry through for a few days, would be down to 253 to 251. Our stop would be right up here at the top. I think it's important to have a stop, a predetermined exit point on every single trade. Whether you place a stop order or not is your choice, but you should at least have an alert, in my opinion. And exit the trade at that level. So here's the entry. Current price.
What is the price?
The stop is 257.05. The entry is 256, something that's moving around, and the target is in this retracement zone, 253, right inside. Make it conservative here. Oops, targets are green. You got about a 3-to-1 reward to risk ratio. The distance between the stop to the entry is your risk. The distance from the entry to the target is your reward. And I like the, I would trade that with a SPY put option. And I like the, and we want at least into the 60s. I think I like that 263. So this is the February contract. It's got 58 days left. I don't want to be trading in the last 30 days of the contract. The whole goal here is to buy low, sell high, right? So we want a pretty good delta, pretty deep in the money. So this 263 gets you that. So that 263 February monthly contract is what I like for the trade here on the SPY. And heck, I like it so much I'm going to take it myself right now. I don't think we're going to get it. It's moving. Let me go to 250. See if I can grab that thing.
Oh, it's starting to drop.
It is dropping fast.
Order filled.
Oh, I got it. Got it at 250. Nice. There we go.
It's going up a little bit, so nope, heading back down again.
Price goes up, price goes down, right? It's like a staircase.
All right, you got it on its little pop-up.
Beauty. Okay, so we're gonna, again, we got a nice target zone. Yeah, it's not gonna go straight down. It's gonna staircase down.
Do you want to type that information in, Dean, and I'll send it out?
I think we're just gonna do it here because this is a pretty fast moving one. So we'll just,
Okay.
it's for attendees only. Looks like John took it a little earlier, huh? Helmet's asking, what's my trigger on ESRX? Let's get back to that daily chart. I want to see it get below this prior low here. So we're looking at a trigger for entry on about 94.30, Helmet. Okay. Stop on the SPY trade, Lalita.
257.05, I think you had.
Yeah, if you want to type it into let me type it into the chat box here. It's moving fast.
You're almost at your target there.
This is on a daily chart. The analysis is pretty crowded.
Oh.
There you go. I just typed it in. Yeah, it's marching on. In fact, the SPY, yeah, it's like, wow, target zone.
So you know what's interesting? It's still within the vantage point range. Everything has been.
Wow. This is a pretty short-term move we're playing here. So in the trading room, we normally don't take the shorter term, right? This is only for a special event. We're taking the shorter term trade on the spot. We might close it today. What you want to do is trail your stop. We got the stop here at the previous highs. We go up and down, up and down. We're going to trail that stop up to the highs and just follow that trend down as far as it'll go and then let it stop out. Take profit along the way. All right, John's got a nice profit going on it. All right. So that, longer term trades, like the couple we pointed out, AMC is a good entry. EPC is a good entry. We're watching CME, XLV, ESRX. That's what we do every day in the trading room here. We take the trades. You can see we've got, 7 trades open, 6 of them in profit. We take them, we manage them. That's the program here in the trading room. We trade. If you're interested, we've looked at some live charts. Finding great trade candidates, it can be like a needle in a haystack. But we found some good ones here. We did some good work. If you're going to take trades, you got to have, if you're going to be profitable in trading, you got to have great trade setups with a high probability outcome. I showed you one of the setups that we watched for. It took a little while, and then boom, there it was, and now we're making profit on that SPY trade already. You got to have risk management. You got to have trade management. If you got all those things in place, you got a pretty good shot at being a profitable trader. So how many of you are excited about the trades we just looked at? We took that SPY. I've given you 2 trades with entries and 3 potential trades. Kevin got me a thumbs up there. Yeah, a couple other folks interested. Yeah, I think we got some good candidates here, and we're in some good ones, right? How many feel like this dude's like, wow, that was a ton of information, man. Let me, if I can, just take a couple minutes here and go over a special offer so you can join on a regular basis and participate in trades going forward. Hey, finding great trades is hard. It's like a needle in a haystack. Once you find them, got to have a plan. You got to have trade setups. You got to have risk management. You got to have trade management. And I offer all of that in my trading room. I have a stock pick subscription service. This is old. We're at an $18,000 profit and a $100,000 account. We're at 18% profit. The indexes are negative. And with my service, I offer all this. Great trade setups, risk management, trade management. You get up to 10 hours of detailed trade consultation per month. You get one-on-one consultation, and you get education. I provide tools and education as we go through here. And you get access to help with winning trades. That's what matters, right? Special offer, people who are here today, you can check out my service, my stock and option pick service, which includes a live trading room, which is Monday through Thursday for an hour in the mornings. Check it out for 30 days for $37, $1 a day basically, to check it out for 30 days and see if it's a good fit. I'm just posting the link in there for you. There's a tiny URL if you want to type it in off screen, but I just posted the link in the chat area. So 30-day trial for $37, 100% money back guarantee. Check it out. See if it's a good fit. If not, let us know. We'll give you your money back. No questions asked, no hard feelings. And if you want to continue, then it's $97 a month, which is a $27 discount, 25% discount off the list price of $127. So I'd encourage you to check it out. I'd love to have you join us in the trading room. We're there Monday through Thursday from 9:45 to 10:45 Eastern time, 4 days a week, hour in the mornings, looking for new trades, managing the trades. And then we send out alerts, email and text message alerts. So here's everything you get. You get a watch list. I just showed you 3 potential trades we're looking at. You get alerts, email, text message. When we're getting into a new trade or when there's a change, you get the exact details, entry, stop, target. Most of the trades can be traded with shares or with option contracts. You decide how you want to do it. I can give the details for both. You get alerts when there's a change, moving a stop, taking a profit, closing a trade. You get access to the live trading room. It's actually an hour now. You can attend if you like. You don't have to. It's optional. Most people find it valuable. We do record it. We do have a couple-minute recap. You get a live chat session every Wednesday night. You can join us tonight if you sign up now. One-on-one consultation. You get a link so you can put it up time on my calendar. We can talk. I can answer any questions. You get risk management and option trading tools and training. ongoing support and training, right? We're here with you. So that's it. There's the link again. 37 bucks for a 30-day trial, 97 bucks a month afterwards. How we doing here? So the S&P heading down still, went up a little bit, down a little bit. On this 30-second chart, we're probably not going to put our stops here. We'll put our stops on that SPY 5-minute chart. We'll trail on that. So what we're looking for here to move the stop, we got a nice move down and then up. When it goes down again, we'll trail our stop to that high, and we'll just keep trailing the stop, which is this red line down. Sorry, Eva, you had something?
On the 30-minute chart, a new pyramid had formed, or on 30-second chart. I'm sorry, not minute, 30-second.
Oh. There, yeah. I don't think we want to use, that's a pretty small time frame to use.
It would stop out already
because
it did go up above that.
It's already in profit. I took 2 contracts, already 150 bucks in profit. That's not bad. For a couple minutes. Kevin, we focus on swing trades. We're in them typically from a couple weeks to about a month. You can see this is very typical, the open trades that we've been in. The longest one here we got in November 19th. We took one just yesterday in EPC. On the 18th, it's already in profit. So you can see a variety here, right? Between typically 2 weeks to a month. This is a watch list trade. Sony just triggered for a short. So put that on a daily chart. So we got a pretty good watch list of potential trades that we're just waiting to trigger. And Sony just put in a new low, and it's looking, that's looking pretty nice. Here's the target on Sony. So there's a short if you're interested on Sony. Stops 52.73.
Think we're ready to take it?
Let me get it typed in. There you go. I think we'll wait for the open because, this is a ADR. So I would wait for tomorrow's open, see what happens overnight. And by ADR, that means it's a Japanese company, obviously, Sony, and it's listed on the Tokyo Exchange. And then these shares trade during the New York session. So they kind of, if something happens on the Tokyo Exchange tomorrow, this is going to move with it. Austin says, what are the details on the SPY put contract?
You listed those up higher. Let's see.
Yeah, I don't think I typed in. It's the.
Oh, not the option. You're right.
So here's the symbol, Austin, on the SPY. It is the January expiration 263 strike put. Is the contract I traded that SPY with. All right, well, I think we're going to go ahead and wrap it up. Thanks, everybody, for showing up. That was kind of fun, and we did get that trade set up, and I walked through what it looked like, how it played out, right? And it definitely played out. It was pretty fun. And gave you several other trading ideas. And again, if you're interested, I would be more than happy to have you join the service. Take a trial, come check it out, be in the trading room with us. All right, there's the offer. 30 days, 37 bucks, 100% money back guarantee. All right, hey, have a great day, trade safe, use risk control. And I'm going to leave the screen up here for a few minutes. If anybody's looking for the link and they want to place the order and they got any questions about placing an order, I'll hang on. But otherwise, we're going to go ahead and wrap up. I'm going to stop the recording. We did record this. We'll send it out to everybody that registered. Hey, thank you so much. Again, trade safe. Use risk control. Keep your winners big, your losers small. Appreciate you showing up. It was fun. And hopefully we'll catch you tomorrow in the live trading room that you sign up. We'll see you there. But if not, we'll see you down the road at another event like this. All right. Take care.